What is clear here is that having been a little bit burned by the enthusiasm at the end of last year and then the reversal on inflation, they're not going to want to reverse so quickly with just one good print. And he stated again and again they'll need more than just one. And I think that's why you had maybe the hesitancy. But understand that the difference between two-cut and one-cut median is one member. This is a very fine point to be seeing, pretty big shifts in market pricing. I think the broader theme here is this is still a Fed that is looking to cut rates, very supportive to financial markets. Obviously, the data this morning is supportive to that. A little bit dismissive about the strength of the labor market. So I think this is a pretty good setup here for bonds and stocks.
Does this mean, in your view, that September is still very much on the table, even if Fed Chair Powell really demurred when it came to a time frame?
I do think it is, and I think obviously, this is the volatility that is what happens when the data lights the way, when you're completely abandoning forecast-based policy for data dependence. But if we do get in the interim period between now and September, reports that are along the lines, we don't have to get as big of a downside surprise as inflation as we've seen, but that continued gradual rebalancing of the labor market, stabilization to slowing on the inflation side, then I think absolutely September is in play, as well as December and the two cuts that are, not in the median, but I think are still very much in play here.